Okay, that's that on what's happening with cooking gas, and this definitely is an evolving situation. But let's talk about what's happening with crude itself. We've got Prabal Sen joining in on the show right now. Prabal, hi, morning. Apologies to keep you waiting, but Prabal, this volatility in crude prices, don't know where it's going to last, but at least picking it up from Trump's hint, it seems like definitely the normalcy should sustain itself.
Yes, I think if this has been one of the sort of optimistic scenarios that Mr. Trump would basically one day wake up and decide that the war is over. So that seems to be sort of happening in a way that this tweet or Truth Social post suggests that as far as he believes, some of the objectives that they would have started the war with have been achieved. So to that extent, I think it's very encouraging. And the only thing that remains to be seen is whether this is followed up by an actual reduction in sort of the intensity of the attacks that have been happening from both sides. I would presume, and obviously, one would have to keep monitoring whether the Strait of Hormuz actually starts to see meaningful flow of vessels following these announcements, because that remains the key. At the end of the day, what has been impacted is the fact that meaningful traffic, again 67 to 70 ships that were actually traversing the strait in a normal environment. I think that number is less than 5 at this point of time, and that too also on a sporadic basis. So to that extent, activity needs to resume. But with if the intent shown by the US seems to be to de-escalate matters, that is definitely a positive, and that is what has led to a $20 pullback after the rally yesterday. By the end of the day, you could already see that the crude had actually reversed a lot of its gains. So that is something that is encouraging.
Probal, how quickly can the supply go back to normal if at all there is a de-escalation? There'll obviously be a lag. How much would that lag be, and how much of that is already priced in? How much choppiness could we see on the price as a result of the lag?
I wish I had answers to these questions. I would be a very rich man, if I could answer those questions definitively. Let's put it in two parts. One is that resumption of the strait, which is essentially resumption of the traffic and normal shipping traffic, which would obviously immediately release much needed barrels into the system, because at least Saudi Arabia, UAE, and some of the other countries have not really curtailed their production facilities as such. But if you have noticed the news over the last couple of days, Kuwait and Iraq have actually shuttered or shut in some of the production facilities because there was simply no storage. So what happens is, when you actually shut in facilities, what you just mentioned in your question, that there is going to be a lag. It's very difficult today to understand that how much time it takes to restart some of the production facilities that have been shut. It could be 7 days, it could be 5 days, it could be lesser than that also. So that's something that remains to be seen. However, one thing is clear, that LNG supplies will definitely take a bit longer. Qatar has stated earlier that it would take a matter of weeks to restart operations. They have completely shut in their LNG. So from an Indian perspective, I think what is more critical is LNG facilities to really start up. And when the strait actually becomes normalized, in any case, I think sentiment would turn earlier than actual flows. Because once you have confidence that normalcy is returning, then every country actually has reserves for anywhere between 15 to 25 days. They would not feel nervous about actually utilizing them, rather than trying to use as little of the reserves as possible, once they have confidence that these volumes will come back to the market. The other part of the equation, if I can take 20 seconds, is that Russia, is coming back into the energy markets as a result of this conflict. There are about 125 to 140 million barrels floating on sea that have been stranded due to the sanctions. So if those volumes can actually find their way into the markets, that can also help alleviate the pain to a certain extent. At the rate of around 20 million barrels of oil per day, which is the production that we have lost due to the strait disruption, these volumes alone can actually help tide over around 5.5 days. The G7 countries have also been talking about releasing some of their strategic reserves and as a mitigation measure. Combined, they have around 1.2 to 1.3 billion barrels of oil. It's not logistically feasible to release a huge amount, but even 100 million barrels from that can also help tide over some of the crisis. So it's a fluid situation. It's more about directionally. If it moves towards normalcy, prices will start to really show that very, very quickly.
Prabal, have to ask you about this LPG shortage. I know early days yet, and we were just chatting with the Restaurant Association president as well just earlier. And what could it really imply for city gas distribution dynamics right now?
It would have been probably a positive if supplies had also not been curtailed at the same time. It would have provided an opportunity, particularly for the units that have dual fuel use capability, to switch over to natural gas from to tide over the LPG shortage. Unfortunately, what we're seeing is at the same time that LPG shortage is there, even LNG has basically 40% or 50% of our LNG imports has basically been impacted due to the closure of Qatar's facilities. So while some of gas could probably be diverted for commercial use, but the priority will, even for the CGDs, will probably remain the domestic and CNG segments. So I'm not sure whether there will be a lot of recourse for commercial customers to switch over to gas. Some of it might happen in the larger cities and the larger and areas where gas grid is developed. But you're looking at a 13 million ton shortage on an annualized basis. We produce about 18 million tons. Our requirement annually is about 31 to 32 million tons. So unless LPG sources can be actually found from somewhere, there's no easy mitigation of the shortage that is there right now.
Okay, Probal, thank you so much for coming in and speaking with us. This is, of course, very, very precious on a day like this to give us this perspective. What we'll do is, viewers, slip into a very short break. On the other side, we'll talk about banks and financials, and we'll have Digant Haria joining us for that conversation. Stay with us.